Making a presentation is part of the venture capital process. Assuming that you contact an angel or VC and have been invited to make a presentation about your company, how can you make it as successful as possible? Here are some important pointers to remember. Remember that your audience will have read your materials before deciding to call you in. You're in there in the main not to present your idea as if it's the first time your audience is hearing it, but rather to answer their questions, to assuage any concerns they might have, and to let them get to know you better. Maintain a calm demeanor. While expressing your passion for the business helps with less formal funding sources, professional funders equate equanimity with leadership strength. Equanimity means composure, calmness, level-headedness, self-control, and poise. Build trust. Your audience is looking to learn about your character even more than they want to assess your competence. Skills are teachable or hireable, but your personality will change very little. Prospective financiers want to work with someone who isn't going to make a risky proposition even more volatile through dishonesty or other bad behavior. Listen actively and express openness to new ideas. Early stage investors in particular are going to be interested in molding you and giving you advice that they hope will help their investment pan out. They are looking for someone who is open to outside coaching and who won't let their ego stand in the way. After you've made the presentation, expect some pointed questions from your audience. Anticipate key questions and have rock-solid answers for each one. In the rest of the lesson, you will learn about the downsides of taking venture capital. You will also be exposed to the introduction of going public, where you can seek financing through an IPO. But just to give you a heads up, consider, for example, eBay, which in 1997 took $6.7 million from benchmark capital in return for 22% of company ownership. Whereas a commercial bank might have made $2 million in interest from a loan of that size over 3 years, eBay's VCs chalked more than $2 billion in the same period. Certainly, Benchmark did help the young company recruit an effective and experienced CEO and other members of the management team. But a good executive recruiter would have done the same for less than $200,000 at the time. The VC also played a major role in arranging for the company's successful IPO. But what was that worth? $2 billion? When investment banking can be obtained on a consulting basis for a reasonable fee. The lesson: venture capital can be enormously costly to you, especially if your business succeeds. Do your homework so that you avoid such disproportionate sharing of your hard-earned profits.